Hello, my name's Joe Walsh, Managing Director of Lepidico Ltd. Lepidico is an ASX-listed lithium development company with upstream assets in Namibia, where we're looking at redeveloping 2 open-pit mines and building a new concentrator. And the concentrate from there will be shipped to our chemical conversion plant, which we're planning on building in Abu Dhabi, which will use our proprietary process technologies. And we expect to be coming into production in 2024.
Joe, good to see you. Here we are in Cape Town, I'm slightly disheveled. You're looking quite relaxed. And we've got the sunshine with us as well. So why are you here? You've got the one-to-one and Indaba going on. Who are you here to see? What are you here to tell them?
Well, the story actually precedes being here in Cape Town. We've been last week. We were in the UAE in Abu Dhabi, and we had some fantastic meetings there. Earlier this week, we've been in Namibia, and we brought on board members of the new executive team. So we've now got an all-Namibian senior management team
Fantastic.
In Namibia, and we've now just got down to Cape Town for Indaba, and we've got a very full 3 days ahead of us.
Yes, yeah. I mean, well, it's quite a good one this year because it's been a while.
Yep.
Slightly delayed, but we're here. We're seeing a lot of institutions down here, financial institutions down here, some majors down here. People just having a look around and seeing who's doing what. Now, in the early days when we first talked, we kind of got into detail about the technical aspects of your business. I think we've covered that. We understand that. Now it's about building a business. We're going to pop up and see your site, the location in Namibia in a few days' time. So that'll be fun to meet a few people on the ground as well. But specifically, why are you here? What do you need to achieve? Because Abu Dhabi feels like the money's there. Where's everything else?
Sure, Matt. It's getting there. It's getting there. We're getting close. Mm-hmm. And so you're right. It's been a couple of years since the last Indaba. We're seeing a lot of people here. We've got a lot of interest. Like we've had to be for the last 2 weeks almost. We've been turning down meetings because we've got a full dance card. Mm-hmm. But really, the focus here is finance. So both lenders. And also potential equity investors.
Right.
And there's, I think, a lot of people just sort of testing the waters.
Yeah.
It's been 2 years since most people have met face to face. And so really it's about creating or recreating awareness of what Lepidico is doing. And we're at such a dynamic position in transitioning the business into full development and then into operations. It's a very critical time for us.
It's a very critical time, but it's also quite exciting time in the market. You look at lithium prices across the board. You've got a lithium project. You've also got lithium chemicals business further downstream. How do people feel that they can engage? What are the sorts of people who want to engage with you, want from you? Can they insert themselves in there? Are they looking for offtake? And what was that relationship look like?
It's really across the spectrum.
Right.
So there is a huge amount of interest in offtake. We are seeing...
For what products?
This is the lithium, predominantly for the lithium. And down here, with the people that we'll be meeting here, right. It's really going to be about the lithium. I've been a little surprised at some of the groups that have actually made the commitment to come here. You're seeing some of the majors coming out of Asia and North America, and I wasn't necessarily expecting that, given where we're at with the pandemic. And then there's a good breadth of financiers here, more probably the usual suspects, but the commercial lenders are here in force, and then it's more institutional investors.
But does it? I'm stunned by it. You think it's surprising you because there's a lot of conversation about companies saying they can produce all the lithium the world needs, whether it be the DLE guys, right, or even some of the brown projects, but struggling to get the funding they need to get pilot plants built, to even get commercial plants built, because technically they haven't quite cracked the code. I'm thinking also some of the clay projects in North America. It's a lot of chat, not a lot of increased production. So in a way, it probably isn't surprising that people are coming to you.
It's not surprising that they're engaging. It's become a little bit of a surprise that they're traveling. to engage.
Right. Okay.
And we've seen this with other conferences that are in the calendar coming up. They were going to be hybrid, both virtual and face-to-face. We're now seeing some of these conferences not do the virtual and just do face-to-face. And I think that's really encouraging.
I think it's fantastic.
Yeah.
That's when deals actually happen, when relationships get built.
Absolutely it is. Like what we've been faced with in the last couple of years is we've all been working twice as hard to make half the progress. That is now changing.
Okay, talk to me about Namibia, because we're going up to meet some of your crew up there. They're going to walk us around, which is really good news. You need money. Okay. Again, timing. I always push you on this. Timing. What's happening? Where's it going to come from?
So yeah, we very much look forward to hosting you up in Namibia, Matt, and you'll meet our General Manager of Sustainability and Country Affairs up there, Benedicta Uris, who's just recently come on board. But you're going to be hearing in a minute from Shontel Norgate, Lepidico's CFO, on the funding side of things. We continue to make very good progress with the US government's International Development Finance Corporation, and I'm not going to steal Shontel's thunder on that one, and also with commercial lenders.
Okay. All right. So let's skip to Abu Dhabi. Now, obviously, Abu Dhabi is it's acting remarkably in a restrained way, given the current geopolitical events. Right? It's kind of Swiss in nature. It feels like they're not short of a bob or two. So again, it's a little bit of a financial conversation, but where are you with the project? Where are you with the Abu Dhabi government and funds in terms of that project? Because it could be a kind of flagship project, not just for you, but also for them. So again, timing, what are we looking at?
Yeah, it's certainly, I think, shaping up to be something of a flagship project, Matt. And the timing is really third quarter this year, when all of these threads are going to be coming together. That's what we're targeting. So it's the binding offtakes, not just for the lithium, it's also for the key byproducts. It's going to be the debt funding. It's the equity piece as well. We were in the Abu Dhabi the week before last. All of that infrastructure development on the lot that we've got within the KIZAD industrial zone, it's being developed apace. And that's not at our expense. That is the industrial park, Abu Dhabi Ports, who's developing that for us. And it's this enormous benefit that we get from shared infrastructure in a massive location like that. And I think you mentioned socio-political exposures here. Yes, like the UAE is being incredibly progressive, and I see, relatively speaking, the risks of a development are receding in the UAE versus other parts of the world where there's huge amounts of uncertainty. I feel very, very comfortable where we're located. It's an interesting one, isn't it? You never thought you'd sort of say that. Well, so I've worked there, worked for some of the families there as well, and it's been sort of interesting place. They've sort of, they were rushing to get to the end point, but you've kind of built up a relationship with these guys. They understand what you are, but also what you could be to them. So again, extent of the scale and ambition that they have, given the technology that you're bringing to the doorstep. Lepidico really, with its strategy of building a lithium chemical plant in an industrial zone in Abu Dhabi, is an enabler. It's seen as an enabler. Lithium's obviously essential for lithium-ion batteries and therefore supporting electric vehicle manufacture. The next step is maybe cathode manufacture, maybe battery manufacture. And these manufacturing facilities require affordable power, an abundant source of affordable power. And that is something that Abu Dhabi in particular can deliver. And we've seen with everything that's going on geopolitically at the moment, energy prices have been volatile. Energy prices in Abu Dhabi have probably been less volatile than anywhere else in the world.
Yeah, well, absolutely. But again, there's this perception that they're all about oil and that's what they do. It's not. There's a sort of new generation, there's a new wave of thinking, and they want to be an energy provider, but also possibly energy storage is a big part of where they see the future going to. Interesting times. But look, I think we better better get the person in charge of the coffers, better get her in a second. And just want to say to everyone watching this, we've done some great interviews and some detail around various aspects of this business. We are going up to see them, the Namibia component. Maybe one day we'll jump over to Abu Dhabi as well, place I know quite well. We'll get into the detail there. So do go and pick up those stories. The links are below. Joe, good to see you here in Cape Town. Hope it all goes well. Should we bring her in?
Indeed. Thank you, Matt.
Let's go for it.
Hello, I'm Shontel Norgate, CFO and Joint Company Secretary for Lepidico Ltd here in Indaba, focusing on financing for our project as well as meeting with investors.
Shontel, hello, how are you?
Very well.
Good to meet you. We've not met. We've spoken before.
First time.
Yep. Your first time to Indaba?
No, second time. So
Right.
I was here 2 years ago. Unfortunately, with COVID, we weren't able to make it last year.
Right.
But really looking forward to being here again.
Good. And what's your background?
Being an accountant, obviously, I started at Price Waterhouse in audit, but since then I've spent the last 25 years in the mining and resources industry, and all of that time has been in startup and development and early production companies.
Right, okay. And interesting times the last 2 years, as you say. Everything's buzzing. Can't talk to people, meet people. And interesting time for the company as well in terms of it's been sort of piecing things together to kind of arrive at this moment. So we just heard from Joe, and for quite a bit of activity at the end of this year. What has he charged you with doing? Why are you here? What do you need to get out of this?
Well, the key thing for me to focus on is financing for the company.
Right.
So we've been making great progress over the last 12, 18 months in relation to that. The focus that we've taken for the financing is obviously, lowest cost of capital is what we're after. So in doing that, we've looked at the project in terms of funding from both the jurisdictions that we've focused on. So for the Namibian piece, we've been focused on development financed institution funding. And with that, we've entered into a mandate with the US Government Development Finance Corporation. They're focused on providing financing into developing countries.
Right.
They're well advanced in relation to their due diligence. We're hoping to pull all of that together sort of around August, September this year.
Brilliant. And what's their expectation with whatever the terms end up looking like? Broadly, they don't do this for the goodness of their hearts.
No, absolutely not.
Right.
I mean, one of the key focuses for DFC that in fact we had to pass before they were interested in moving forward into their detailed due diligence was ESG. So they were very focused on how we were going to be conducting the project, how it was going to be benefiting Namibia, and were we going to be doing it in an appropriate way. So they did an initial high-level due diligence around our ESG credentials, both at a corporate level and also at a project level. Once we passed that hurdle, they were then interested in moving forward and entering into that more detailed mandate.
See, that's fascinating. So that's been a big part of the conversation for the last 6 months. ESG, we've got people sitting on both sides of the fence who are subscribers, who are viewers, listeners here, and we keep saying that it's a very important part of the way that the funds think and behave. But what's the reality on the ground? When they say they're interested in what our ESG credentials are, what does that actually mean? Is it just a tick box exercise they need to say they've gone through, or can this fall over if you don't meet certain criteria for them?
It can absolutely fall over if you don't meet certain criteria. I do think a lot of companies are paying lip service to ESG. It is one of those buzzwords that everyone's using. But one of the things that I'm really proud of with Lepidico is we do walk the talk.
Right.
We are really focused on making sure that we are building a sustainable business, that we're working with local stakeholders, and that we're doing things in an appropriate way.
Right. So we've heard Joe in person. We talked about recommend people go and watch that conversation around zero waste and the green credentials for sure. But again, it's just in terms of how does it affect your conversations? Because people say, well, surely this is based on the economics of the project, and yes, we get the kind of the what the US is trying to do in terms of saying foreign direct investment, but it's for the benefit of developing countries. But at the end of the day, surely this is about the money. It can't just be greenification. Wokeism is a word we hear a lot. How does it affect your conversations? I mean, how much do you believe this versus just paying lip service to it?
Well, I don't think the US government's paying lip service to it, and certainly Lepidico isn't. But absolutely, the economics need to stack up as well.
Yeah.
They're not going to put money into a project that's not going to make a good economic return.
Right.
But they're not going to put money into a project that's making a good economic return, but is causing issues with local stakeholders or causing environmental problems.
Right. So that's the US getting involved, and that's for developing countries, and that's great. And there's a few countries that do that, but at the end of the day, they also want their kind of critical minerals, critical security component ticked off as well. Maybe that's a conversation for another day. What are the African banks and funders doing? Surely they should be stepping up to the plate here.
And they are. So as well as, we're very well advanced with DFC, but we're not stopping there. We've had conversations and we're moving forward with local African-centric DFIs, as well as the African commercial banks. Right. So we're in discussion, and those discussions will be ongoing this week. That's part of the reason for us being here, is to advance those discussions.
Okay, and those entities, are they more expensive? Do you get better rates? I mean, you kind of think that they're African institutions. You feel they should be doing work for Africa. So, what do you get out of being able to deal with them?
Look, one of the reasons you do talk to DFIs in particular is because they can offer you better terms, longer tenure, lower interest rates. But also having commercial banks involved, there are other services that they can provide. Right. So trade finance, for example. So that there are benefits to having the commercial banks. It's getting that mix right between the DFI financing and the commercial banks.
Okay, fantastic. Should we skip up to Abu Dhabi?
Absolutely.
What's happening up there? That's what people are excited about.
Yeah, so obviously then the financing for the Abu Dhabi piece, that is obviously not considered to be a developing country, so DFI funding is off the agenda there. I figure anywhere where there's a Grand Prix, it's not going to be a developing country. But we've been having detailed discussions with the commercial banks there, so they're very interested in the funding. And then also the other part of the funding piece can come from the export credit finance.
Right.
So we're currently working through the front-end engineering. Yep. We will end up with the cost estimate and the detailed list of where the equipment's going to come from for the chemical plant, and that will then allow us to assess where those pieces of equipment are coming from, and then perhaps what we can be doing from an export credit finance perspective.
Are you being affected by these inflationary times, or have you been able to kind of secure deals prior to this? Because without the funding in place, it's hard to do that, right? So again, people look to projects and they're concerned about projects which are a little bit more marginal, going to be, well, we've seen a few just terminated in the past couple of weeks, right? So when do you get to plant this flag in the sand and go, right, we know what the pricing is, therefore we understand the economics of this thing, and we're very comfortable with being able to move forward?
So we've got the detailed cost estimate is in place for the Namibian piece. Lycopodium, who are our EPCM contractor, are working on the Abu Dhabi piece. The reality is we are seeing cost inflation, but on the flip side of that, we've also seen significant increases in lithium price. So whilst we completed our detailed definitive feasibility study in May 2020, what we're seeing is whilst the costs have gone up, it's more than offset in terms of the increase in revenue that we're seeing coming 2020.
Through. Yeah, you're okay. Well, that's great. Look, appreciate meeting you and making the time to come and see us. I know you're busy with various meetings down here in Cape Town. Good luck with those.
Thank you.
And we will catch up with you again perhaps in the next couple of months or so.
Sounds good.